Good morning, everybody. Lots of talk everywhere today about the Fed rate cut yesterday. And I know everybody's thinking, oh, it's a Christmas miracle. Look, Christmas miracle. The Fed cut rates, mortgage rates are going down. But guess what happened yesterday? The rates went up by almost 0.25%. How is that? Why would that happen? Well, it's not just what the Fed does. The Fed doesn't control mortgage rates. That's the overnight borrowing rate. And so, essentially, you have to listen to what the Fed chairman says. And what he says is inflation is still stubborn. Inflation hasn't come down quite as much as it needs to. And so the projections into 2025 are that they may not cut rates as many times as they had initially predicted. So what's happening now is the markets are kind of going crazy. They're going, wait a minute, we thought rates were going to come down all through 2025. And now the Fed is thinking, they may not come down as much. So that is what is causing the mortgage rates to actually go up. So what does this mean to you? Well, number one is buying houses right now might be a good time to do it. There's going to be less competition just simply because it's the Christmas season. Number two is that there are people sitting on the sidelines just waiting for interest rates to go down. Well, they may not come down anytime soon. So if you have that house, if you've been looking at a house that you think you ought to buy or you like, now may be a time to go get into it, because you have less competition, number one, from the holiday season, number two, because the interest rates have been a little bit higher. And then the third thing is that you might have sellers that are really desperate to sell, and you may have options to get them to give you some concessions, either to cover closing costs, or maybe they'll drop the price a little bit. So now may be a good time to jump into this market and get after it. If you have any questions about it, feel free to reach out to me. You know how to get me. Talk to you soon.